at least there is a big beat coming in terms of revenues as well as margins. Dollar revenue has gone up by 6.1% on a quarter-on-quarter basis. We were working with a 4.5% improvement. In constant currency terms, it's a growth of 4%, higher than expectations of 2.5% to 3%, but it's lower than what TCS had reported, which was a 4.8% growth. But Infosys, like TCS, has reported an all-round beat. There is a margin improvement. Margins have gone up to 25.35%, which would be a quarter-on-quarter improvement of 270 basis points. So it's an all-round beat coming in from Infosys, and I think the company has reported the highest ever deal wins at $3.15 billion this quarter. It was expected because in this quarter the company had closed the Vanguard deal, which was the the largest ever in the company's history. So it was expected to be a blockbuster quarter in terms of deal wins, but at $3.15 billion, if my memory serves me right, it could be at an all-time high. Consolidated profit also better than expectations, a beat of 300 crores compared to estimates.
No, yes. I'm sorry to have interrupted you, but it does look like a beat on revenue, a beat on profit, a beat on margins. But would you say that the deal wins is the crowning glory because it kind of ensures sustainability of growth?
Absolutely. The fact that the deal win momentum continues to be very strong across the board, and every IT company is feeding off the other IT company when it comes to demand commentary and numbers. So Infosys numbers reinforces the fact that perhaps Indian IT companies are at the cusp of what TCS call a multi-year technology upcycle. I'm just trying to get some more details. The digital revenue growth is now 47% of the overall revenues, and that has seen a 25% year-on-year growth in constant currency terms. So basically, half of IT companies, or at least Infosys, earnings and revenues are now coming in from digital. What I'm trying to assess is whether the companies increase the guidance. Okay, they have. Let's flash that. FY21 revenue growth guidance is revised up to 2 to 3% in constant currency terms. This compares with 0 to 2% and better than expectations. The street was working with 1 to 3%. The companies increased it to 2 to 3%. So 2 to 3% is the growth for Infosys this year versus expectations of versus the earlier guidance of 0 to 2%.
Would you be a little more generous with your objectives and say this is a whopping increase in the guidance? Because the upper bound in the previous guidance, which was 0 to 2, has now become the lower bound, with the guidance being 2 to 3%. So would the street take it, seriously, positively?
Well, the street expectations were it will be 1 to 3.
Okay.
And they thought 1% at the lower end, considering the management is conservative. So if you look at the actual estimates, they were working with a 2 to 3% kind of growth that the company will report, really, in FY21. It's just that, this company has the confidence to give you a guidance in a narrow band. So that's how sure they are of growth.
Okay.
Why does the company give you a growth of a 2% band? Because there is some uncertainty which is built in. Yeah. The fact that the company is giving you a guidance in a narrow band just gives you a sense that, the company is very certain of those revenues accruing in the next 3 quarters.
Okay, so that's 5 beats, isn't it? They've beaten on revenues, they've beaten on profit, they've beaten on margins, beaten on guidance, and beaten on deal wins.
And they've beaten on margins as well, because the company has upped the margin guidance to 23 to 24%. This compares with 21 to 23% margin guidance that they had given. And the street expectations was that the company will not increase the guidance this time.
So that's a big beat. Then it's 6.
Again,
it's around half dozen in terms of beats.
Absolutely. But today, of course, the stock corrected. It was down, I think, 1.5% after the entire IT sector saw profit booking, because Wipro's earnings didn't live up to the elevated expectations. But again, Infosys has been the leader of the pack when it comes to the up move. It's rallied 55%, I think, on a year-to-date basis. After TCS earnings itself, the stock got re-rated by close to about 6-odd%, even including the correction today, so 5 to 6%. So I guess good numbers were priced in after TCS.
Fair point. Rima, we should be having some guests joining us. The important point is whether from these elevated levels we are going to get both EPS upgrades and price target upgrades.
I think we will.
What is your
My bet is we're going to see some EPS upgrades because there is a margin beat And that flows through into the EPS level. So even as the street was expecting the company to up the guidance for the full year on revenues, they were not working with a margin guidance increase. And the fact that it's at 23 to 24%, it surpasses expectation, which should flow through into the EPS line as well. So
may I say one thing that perhaps should something which all entrepreneurs and all CEOs of all companies should hear out. Infosys to hike salaries and roll out promotions from Jan 1st. Infosys also says that they're going to pay 100% variable pay shortly. So that's a very important consideration even for the city of Bengaluru and other places where Infosys has large campuses. 100% variable pay, hike salaries, as well as roll out promotions. That brings a certain confidence to consumption expenditure by people in IT businesses. It's not a large part of the workforce, but for the cities of Bengaluru or Chennai, it would, or even Hyderabad, it would be a very large percentage of people working there. Well, I think you have a guest, and we should go ahead.
Just one more internal. It is the highest ever deal wins for the company at $3.15 billion, and attrition for the company has come down to single digit. So talent retention continues to be very strong for companies like TCS and Infosys. Moshe Khatri, the managing director at Wedbush Securities, now joins in. Moshe, these numbers are surpassing expectations. Your initial reading?
I think this is pretty much in line with what we've seen from TCS and what we've seen with some of the commentary that we had last quarter. It's always, it feels good to see that some things go back maybe to normal. Salary hikes, wage inflation, this is something we haven't heard when you look at the space for some time. The TCV numbers, which seemed very robust. You definitely want to give credit also to the company's new management team that definitely made a positive impact on go-to-market strategy, on the bench in terms of skills, and in terms of the competitive positioning. So all these together are really coming through and are reflected in these numbers.
Do you expect to hear EPS, and would you expect to do yourself some EPS upgrades? Would you also upgrade your price target?
To tell you the truth, we actually raised the price target twice since during the past 6 months, and I think we're getting close there. So, yeah, typically if you have a buy rating and outperform rating on a stock, you will have to on raising those numbers and your price target.
Okay. Moshe, what should be the valuation multiple we should ascribe to an Infosys now?
When these companies reach that magic growth number, which is north of 10%, and I think we're headed to that direction, you will probably see PE multiples. And again, I'm looking at some other tech names in general in the market. You will see forward PE multiples going to north of 20 or 25 times earnings.
Okay. Moshe, it's about the highest ever deal wins that they have announced, much higher than expected. They've upped their guidance, both on margins and on revenue. Therefore, do you think that that statement that TCS made, that they are at the start of a multi-year bull cycle or multi-year up cycle, rings true? You think that they have something good going for many years now?
Yeah. We hosted an investor call with Infy's former CFO a couple of weeks ago, and he pretty much said the same thing. He said, Moshe, look, COVID and the environment is actually, and on top of that, the positioning of a lot of the tier one offshore companies is really getting us into the start of a new multi-year spending cycle, and it's a growth cycle for the space. And, it seems that this is where we're headed to. And again, remember, the magic number is that double-digit growth that we haven't seen for, 3, 4, 5 years.
That's right.
Okay, let's get in some more reactions. Moshe, thank you very much for joining in and sharing your thoughts on Infosys. Amit Chandra of HDFC Securities also joins in. Amit, we've parsed through the key numbers, but anything in the internals which stands out? What, according to you, is the highlight of Infosys earnings this time around? And how do you expect the stock to react tomorrow?
Yeah, for Infosys, I think the main highlight would be the large deal wins, because they have reported very strong deal wins. So this includes the Vanguard deal that they have announced. So this is the highest ever large deal win that they have reported. So this shows the optimism in the market, and the large deals are getting closed. So we have a pretty mixed commentary over large deals. But with work from home and sales team working from home, deals are getting closed. That is a very positive sign, and there is very holistic recovery in the demand. And this time the demand is more broad-based across verticals. So that is one thing. So that is for the sector, and also the margin beat. So the margin beat has been pretty healthy. So it's above all estimates. So it's we were expecting flattish revenue. And the guidance of 21 to 23, I think the margins will be at the top end of that. Maybe it can beat that also. So margins is one thing which the street is not factoring in. Maybe growth numbers are slightly ahead, and for the full year we were. For the full year, we were already in the dollar terms, we were at around 2%. So maybe we'll have to upgrade that. But overall, very strong set of numbers from Infosys.
What is your EPS estimate, Amit, and how much could it go up by?
So we'll have to work that out. But as of now, the stock is trading at around 24x FY22. And if you see the discount to TCS, which is around 15 to 16% discount to TCS. So I think this discount can narrow down, but overall the whole sector is seeing that kind of traction, and I think the multiple rating thing for the sector has already happened. Now the focus will shift to earnings growth and the margins expansion and ability to hold on to the margins, because now the salary hikes are actually getting back to normal. So we'll have to see how the margins pan out for the next year.
What is exactly your EPS upgrade likely to be for 22 and 23?
So the EPS upgrade will have to work that out, but it will be somewhere in the range of 4 to 5% at least.
Oh, okay.
Aniket Pandey of Prabhudas Leeladhar is also with us. Aniket, afternoon. It's an all-round beat by Infosys, but the problem is the current valuation is already factoring an improved growth environment. So Street is already working with a double-digit growth for the company for the next 2 years. So is there any upside left? Would you constitute these numbers as a positive surprise?
See, Rima, hi, thank you. So basically, I believe that valuation is a factor of.
Okay, I think we'll try and reconnect with Aniket. But for those of you who've just tuned in, Infosys has reported a very strong Q2 earnings, quite similar to what TCS had reported. It's a dollar revenue growth of 6.2% in constant currency terms. It's a growth of 4% sequentially, ahead of expectations of 2.5% to 3%. It's the margin improvement, which is the key highlight. Margins have gone up by 270 basis points on a quarter-on-quarter basis, and they've come in at 25.4%, and that's driving a beat at the profit line as well. And for FY21, the company's upgraded the revenue as well as margin estimates. We've managed to reconnect with Aniket. Aniket, you were telling us.
Yes, so basically I believe that valuation will be a factor of earnings upgrade and other macro factors also. So yesterday only US banks, Citi and JP Morgan posted their result, and we have seen very strong increase the tech spend which happened in this quarter also. Okay, so now when it comes to Infosys, I believe that the margins what they posted was not at all factored in anyone's estimate. Going forward, I believe that Infosys will be the fastest growing large cap in our coverage universe, with higher tailwinds to margin from work from home and work from anywhere going forward. So I believe as on valuation right now, it's trading at around 21x FY23 multiple. Okay, with my EPS is at 55.2. Okay, I believe with a strong margin, what Infosys has posted in this quarter, EPS estimate will be easily revised for the street, and mine also at around 6 to 7%. Okay. So as of now, it is trading at around 24% discount to TCS at FY22 multiple, which I believe will narrow down further with such a strong margin performance also and strong deal wins also.
So there is more upside in the stock?
Yes, I believe there would be more upside in the stock because in the second half of the year, I believe that the furlough quarter wouldn't be considered as furlough quarter, and the billing days would be more as compared to earlier years what we had. So in earlier years, second half used to be soft, but now going forward with such a strong deal wins and deal pipeline you are having on the table, I believe that IT services industry will have a second half of the year also, and many deals are getting squeezed up, and many deals are getting executed quite faster in this quarter. So I believe when there is a revenue and margin tailwind to your stock, I believe that valuation can easily sustain from here on also.
Aniket, thank you very much for joining in. We'll thank Amit as well on that note. So Infosys has delivered an all-round beat, higher than consensus expectations. But again, how much of it is in the price? For that, we'll have to await the stock reaction tomorrow. For now, we'll get into a break. On the other side, we'll have the management of Infosys speaking at the press conference, so stay with us.